Good afternoon. Welcome to Mid-Cap Radar. I'm Sonal and with me is Vivek, and this is the HDFC Sky studio. The markets, they are looking good. That recovery that we saw after the initial volatility, that has stabilized at that 508-point higher on the Nifty. The mid-caps are the one outperforming. But you know what? There's so many questions left that we really don't know whether it'll stabilize from here on or not.
You're absolutely right. Yesterday, the mid-cap and the small-cap indices lost over 7 and 8%. So while this is an excellent bounce back, we've still not come back to the levels that we were yesterday. Lots lined up on the show, lots to discuss, post what was a very, very busy day yesterday. First up, the top headlines. Stocks see a broad-based recovery after the sharp sell-off yesterday. FMCG and consumer durables are the big gainers, while capital goods and industrials are the weaklings.
Stocks of FMCG, consumer goods, two-wheeler, IT and healthcare players clock gains as investors make a defensive shift. Brokerages to adopt a cautious stance in pricey capex-driven stocks.
Crude metals and bullion see a further decline, leading to falls of 5 to 9% in the week. Rising inventories and concerns over slowing growth add fuel to geopolitical concerns.
The spokesperson for the Telugu Desam Party tells CNBC TV 18 that the centre's support will be needed to build the state's capital and boost the state's health. The Janata Dal United Party member dismisses demands for rail or deputy PM for his chief as media gossip.
Welcome to Mid-Cap Radar, this particular show where we focus on the mid-cap and small-cap stocks and what is it that's doing very, very well. Now, yesterday, the mid-cap and small-cap index, like we just mentioned, lost 7% and 8% respectively. Now, when you're talking about how they're doing today, bounce back in style. What's doing very well? The entire FMCG pack. Not only that, have a look at the consumer discretionary and especially the alcohol stocks. So look at names like Jubilant Foodworks, look at names like United Spirits, also look at names like United Breweries and Radico Khaitan. All of these stocks doing quite well. Sonal, anything on your radar that you have?
Well, I do have a lot of them, because a couple of these stocks have made a comeback and how. Amara Raja, for instance, is up 13.5%. We have Vodafone Idea. Yesterday, that stock was down 20%. Today, it's up around 12%. But of course, I wouldn't take all the names right now because we have Horma standing by on the big wall with our segment Mid-Cap Movers. Hormas, what do you have for us?
You still can. There are enough and more moving around for us to have a replacement. But as you are highlighting, right, FMCG is actually the man of the match in today's trading session. And every stock that you would pick up is trading with gains. It almost feels like the street has just suddenly woken up to realize that FMCG stocks are also present to be invested in. Dabur, Marico, Imami, Godrej Consumer, all of them seeing gains of anywhere between 7 to 11%. So strong going there for FMCG stocks. You mentioned Vodafone Idea, and the entire Aditya Birla group is also in focus. Aditya Birla Fashion is now nearing the mark of 313% higher there on the stock, and Aditya Birla Capital also having a good day. What is not having a good day is most of the PSUs. They had a terrible day yesterday, and I guess the trend continues today as well. Some of them are in the green, but most of them continue to trade lower. Bharat Dynamics, Oil India, Cochin Shipyard, Garden Reach. Remember, all of these stocks have gone up anywhere between 100, 200 or even 300% in the last 12 months. So they are seeing a sharp sell-off from the highs. Some stocks doing well on the back of volumes. BKG continues to grow from strength to strength. Now almost 659% higher is BKG. Bombay, Burma, Emphasis, Bata, all of them doing well on the back of strong volumes. And lastly, some other broader market names that are not doing well in today's session. Titagarh Rail, railway stocks are also taking it on the chin over the last 2 days. Engineers India and Sterling and Winsell also not having a good day for themselves. Back to you guys.
Okay, so there are some pockets still which are not doing well, but again the question remains whether these levels will stabilize or we will see some add-ons to that or not. A lot remains to be answered. We'll do one thing, we'll slip into a short break. When we come back, we'll shift focus on the realty sector. We'll be joined by Pankaj Kapoor, the founder and managing director of Liasis for us, along with Niranjan Hiranandani, the founder and managing director at Hiranandani Group. We'll discuss what is the impact of the election outcome on the realty sector. Stay tuned. Welcome back. You're still tuned into Mid-Cap Radar. The sector in focus is now real estate. We've seen the real estate stocks make a pullback from the highs. They've come down sharply from their 52-week high levels. And also, there have been a lot of changes. Of course, the election outcome has not been as expected. Real estate was one sector which has seen a massive boom in the last 5 years. So what could the possible impact be? Let's welcome Pankaj Kapoor, founder and managing director of Liasis Puras, along with Niranjan Hiranandani, founder and managing director at Hiranandani Group, joining us now. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Hiranandani, let me come across to you first up. And specifically, I would like to understand about what's happening in Maharashtra. We do have that big infrastructure push that we are talking about just in Mumbai, around $70 billion worth of infrastructure projects, which could have been very positive for realty space as well. Do you think with the changes that we are seeing, there could be some impact going forward in the realty space in Mumbai and the other metros as well?
Thank you very much for inviting me. I am very positive and proactive as the future is concerned. We are very fortunate as far as Maharashtra is concerned. Both the political parties, both in terms of the government that is there today, as well as the other parties who are a part of the government process and have stood for elections, all are proactive as far as the infrastructure is concerned in the state. So we are seeing both, I would look at Mr. Uddhav Thackeray, Mr. Sharad Pawar being part of the opposition in that sense of the term in the state, as well as the government certainly is proactive in terms of the infrastructure. And both of them have earlier been as part of the infrastructure growth commitment which was there when they were running the government as it is. So I don't think as far as the infrastructure is concerned, in Maharashtra that we are going to have any difficulty in spite of the division which has taken place. The second aspect of it is, I think the central government's commitment for infrastructure on an external infrastructure, the bullet train coming to Mumbai, the Delhi-Mumbai industrial corridor, all these aspects of it are going. And the focus on Mumbai, if you look at it separately, just see, in the next 2 years, we are going to add 330 kilometers of metro. We have a coastal road which is going to be delivered in the next 3 months. And we have the Cross Harbour Bridge, which is creating a huge opening of new development that will take place. So all in all, I don't think that any major change is expected in spite of India getting the higher numbers. I think the support as far as housing and infrastructure is concerned. I want to make one special mention. I think the next focus, if I can make a prediction, is going to be on the slums of Mumbai. The first project which has been done is Dharavi, but I think there is a huge expectations among the slum population of Mumbai because redevelopment was committed more than 15, 20 years ago by the government that large number of redevelopment of slums will take place. Now only 5% of it has been done. So I think any government that is proposing to be there as far as next state elections of Maharashtra will give a huge commitment as far as slums redevelopment is concerned. And I think that will rule the roost as far as the Mumbai region is concerned, with 50% of the population living in Jhopatpatti slums in Mumbai.
Right, sir. Let me also bring in Mr. Pankaj Kapoor. Thank you so much both, for joining us. First up, I want your first reaction in terms of now that the new government is coming into place. How do you see flows as far as the entire real estate space is concerned? You work a lot with deals that happen over here. Do you see any slowdown as far as further commitment of money is concerned?
I don't think so, slow down. I completely agree to Niranjan sir, what he mentions about the infrastructure boost will continue to the market. And apart from that, we, during this particular last post-COVID period, we have seen a little bit of retardation in affordable and the priority sector housing. I think that will resurface and the government will probably consider boosting the demand and supply in this particular segment. So overall aspects, I see there would be a further growth. And I think the kind of a mandate with the government has got, I think they'll be looking at promoting affordable housing and the priority sector housing in that particular sense. And as such, we have around 64 million housing requirement in the next 5 to 6 years time, so over a period of time. So there is a shortfall and there is a need which is there. And the way the perspective which is looking is that I think the government will be more proactive in the solving the problem of the Aam Aadmi and the people. So there would be more and more reforms, and there would be more and more incentive for the housing, and especially for the poor and the affordable segment. So in that sense, it will continue to be boosting. And apart from that, infrastructure, I see there's no retardation is likely.
Mr. Kapoor, just to follow up on that, let's split it in three buckets that we always do real estate, right? The affordable, the mid-housing and the luxury segment. Between these three, do you think it is the affordable housing which will grow fastest and the luxury route that we've been seeing will see some plateauing now?
Yeah, it will. And in fact, why we have seen the luxury growth during the period, because we were seeing a stagnancy of almost 10 years in the luxury segment. From 2015 onwards or 14 onwards, we have seen virtually no new launches and the sluggish growth in the luxury segment and high inventory overhang. But post-COVID, as the demand in this particular segment grew, as well as the new supply started coming in, because the old supply got really consumed up and there was a scope available for the replenishment of the supply. So in recent times, we have seen the more new supply, and this supply will be there for 8 years or 10 years time. So I see there may be in coming quarters a retardation in the new supply in the luxury segment. Demand may also see a little bit of moderations going forward, because a lot of demand really got consumed and then a lot of ready property got sold out. So I think most of the property which is available in the early stage of constructions and the prices also have moving forward. So I see the luxury may see a bit of moderation, but I don't see there would be a decline. The growth may be moderated, the way the way we have seen the new supply has hit in the market in the last 2 years, may see a bit of retardation. But affordable and segment, we are seeing an early sign for the resurgence of the demand, and I think that is where the government's focus will also be.
Understood that. So you're expecting some moderation in demand as far as the luxury segment is concerned. You're expecting a resurgence as far as the affordable space is concerned. Mr. Hiranandani, just going back a little bit, right now when you're looking at the market, especially the Maharashtra market, it's doing very, very well. Not only are we seeing a lot of new launches, we're also seeing a lot of redevelopment projects that are happening. In the context of this activity, and along with that, now interest rates are slightly elevated. Where do you think the focus of this new regime should be? Do you think there are any pain points that they can address? And going forward, how do you see the market pan out, number one, in terms of launches, and number two, in terms of prices?
Well, as far as the government is concerned, a lot can be done. We are looking at the affordable segment in a different sort of way. If you recall, during COVID, the government brought about a 50% reduction in stamp duty and other charges. Today, almost 50% of the cost of the house is in government taxes, development charges, charges for FSI, GST, and all the other duties. Now, if they want to make affordable housing as far as Mumbai city and suburbs is concerned, unless the government does not go back to reducing the stamp duty, reducing all these charges, affordable housing just can't come. So it doesn't exist simply because the government costs are too high. That's number one. Number two, the slum scheme has actually not seen a break going up. The Dharavi scheme is expected to take off very soon. There's another scheme, Ramabai Nagar, which the government is taking up on its own account. It is my belief that the government will have to take up many of such schemes in Mumbai and Maharashtra to meet the expectations of the people who are living in jhopatpattis for the last 20, 30, 40 years. I think it's possible to do so. If you want private sector to bring in more construction in the affordable segment, you will have to reduce the duties and charges and ready reckoner rate and other things that you need to do. Unless you don't do that, you can't create affordable housing because the money is actually going to the government's coffers. Almost 30%, 40% of the total cost of the house is going to government coffers itself. So I think these aspects of it will have to be seen by the government in order to see that the people's expectations with the prosperity of India, 8% GDP plus, which is taking place, that the people at the grassroots also want to see the benefits of all this percolate to them. So I think this expectation should be met by the government, and they can do it. See, the problem is not when you don't have money and you don't have the resources or you don't have an idea on how to do it, it's okay. But when you know the route and you have used that route earlier, why not repeat what has worked very well as far as the state is concerned? And of course, about the slums, very important.
Okay. Mr. Hiranandani and Mr. Kapoor, thank you so much for joining us today. Out of time, and the political news that keeps coming in, so we have to address that as well. But we'll touch base with both of you yet again once there's some finality in terms of the final positioning as well. We'll slip into a short break. Nikhil Nigania from Bernstein will join us on the other side to discuss the trends and the impact of results in power sector. Stay tuned.
Welcome back to the CNBC TV 18 HTSC Sky Election Headquarters. We are now joined by Nikhil Nigania, the Director and Senior Analyst at Bernstein, to discuss the power as well as the industrial space. Good afternoon, Nikhil. Thank you so much for making time for us today. First up, post the elections, we've seen quite a bit of a sell-off as far as, number one, some of the top industrial names are concerned, and along with that, quite a bit of a correction even in the power space. First up, I want your view on L&T, so that after that we can go to the power space. L&T narrative so far was on Saudi capex, but it's seen quite a bit of a correction today. What do you attribute it to?
Yeah, I think the entire story on L&T, it's on two fronts. One is Middle East capex and second is India capex. I think just the expectation that I think the market has that, with a weaker mandate that the infra capex could see some slowdown is what is impacting L&T. So order inflow growth is quite critical for an EPC company. So if that doesn't happen to the extent envisaged or guided by the company, which is 10% growth for this year, for example, then the company stock could be impacted. So which is what the market seems to be pricing in. We, although continue to be positive, we think it's a longer sustainable cycle on infra in India. And even on Middle East capex, we think it's sustainable. Near term, there could be some margin pressures here and there. But the longer story is definitely positive on L&T as far as we are concerned.
Okay, that is about L&T. I wanted to discuss the power space with you because we've seen a big cut yesterday. Do you think that was only because of a lot of them being PSUs and, the big fear that now PSUs will get derated? Or do you think there are some fundamental changes that we are seeing from here on?
So power stocks actually had rallied quite a bit. We think it's more just that factor, the rally which happened and the valuations at which some of the stocks were. Because fundamentally, if you look at the power sector, the heart of the power sector is power demand. And power demand growth, if you look at the last 2 decades in India, whether the government is NDA or UPA, it's grown at 0.8 to 1x of the real GDP growth rate. That on top, there are new use cases of power in data centers, in electric vehicles, and even in green hydrogen per se. With that, we think there's a more upside risk to power demand than a downside risk. So we think the concerns on valuations could be slightly fair for some of the stocks, but the fundamental story of, power demand continuing, power shortage in the evening hours being a challenge are still there, are still relevant. Nothing changes irrespective of the outcome of the elections.
Nikhil, I also want to touch upon, the renewable space. Yesterday PM Modi in his speech mentioned that he continues to be very positive and he will stick to his stance as far as renewable energy capacity addition is concerned. Does that mean that thermal will now take a backseat, especially when you're looking at players in the thermal space, players like BHEL? They've seen quite a bit of a re-rating in the year and a half gone by on the back of thermal capacity addition. So how do you see the renewable versus thermal debate now?
No, fair question. The PM speech did highlight renewable specifically. But if you look at the challenge India has, even today, I mean, the results were out yesterday. Even if you look at the power prices today in the spot market, they are as high as 10 rupees after 6 p.m., 7 p.m. in the day. So, which means solar can't solve that problem. That problem of power supply in the evening time when the sun is not there has to be met by thermal. So, hence, as per us, availability of power is the most important thing for any government. And if you have to solve for evening power shortages, you have to add thermal. You have to add thermal as long as power demand grows, as we expect, at close to 1x of real GDP growth rate, which is 5-6%. So, or slightly higher. So, thermal is inevitable. It's a necessity in India's context.
Okay. Nikhil, give us your view on IEX. How do you look at that particular name? And also, what are your top picks in the power sector now, considering that there could be some volatility and the kind of markets that we are in?
Sure. So IEX benefits on the volume front in the last few months as e-auction coal prices have come down, availability has increased. So volume growth for IEX could be good. We continue to be negative on the stock though, because we see regulatory overhangs for the stock. One regulatory overhang is market coupling. The second regulatory overhang is other transaction charges. So IEX charges the buyer plus seller 4 paisa per unit of power, which is actually quite high if you compare it to global peers. So European exchanges charge significantly lesser than that. So we do see a longer term risk to that. So near term, it could be good volumes for that, but the structural regulatory pressures on transaction charge, on market coupling continues over IEX. Hence, given those reasons, we continue to be negative on IEX. With regard to our top picks, we continue to like NTPC and Power Grid.
Nikhil, sorry to interrupt you. Give us a sense of how much India needs spend as far as power transmission capex is concerned. That will continue irrespective of whether it's thermal capacity or renewable capacity. In that context, how are you looking at Power Grid, and which are the other ancillaries or which other spaces will you look at favorably from the current play?
A fair question. So whether it's renewables or thermal, transmission is the biggest bottleneck globally. In India, we had done a good job earlier. Now, incrementally, it's becoming a challenge for us as well. So for transmission capex, our estimate is that there will be a re-rating happen. We think the guidance given by Power Grid is also on the lower side. If you compare our estimates to consensus estimates, our estimates are 30% higher on capex than consensus. We think interstate transmission capex could be 50-60,000 crores a year in India, and it's a multi-year cycle. The beneficiaries of this acceleration in transmission capex, one on the developer side is obviously Power Grid, building the lines, and then on the equipment supply, there's a long list. We would suggest being on the higher voltage players. So we don't have them in our coverage, but the high voltage players are essentially Hitachi Energy, GE T&D, Siemens, and CG Power. Those are the key high voltage segment players benefiting from the transmission capex acceleration that we expect in India.
Okay, all right. Thank you, Nikhil, for joining us today and making sense of what's happening in the power space. A lot of moving parts, important to get some expert opinion as well. With that, we'll take your leave on this edition of Mid Cap Radar, but stay tuned, your stocks when we return.